All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video session. I'm sorry I'm running a little bit behind today. I apologize, but I have an excuse. Today's a holiday. Okay. No, I'm just joking, but today is a holiday. Anyway, thank you for joining me. Let's get this thing started right away. All right. Because I want to catch up here. Okay. So hold on. Let me just pull up my slide. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right. So if you're new to the stream, welcome. Let me explain to you very quickly how this works. So first, I'm going to run through the economic calendar so that we can be aware of any important events that you could mitigate risk around. Second, we're going to go over the Bitcoin chart, and we're going to talk about today's title, which is confirming on smaller timeframes. And then after that, we're going to look at the Trade Scanner Pro, and we're going to see if we can find any new signals. Now, today, again, I'm going to look for a day trade. I'm telling you that in advance. So I can explain to you how that all works and all that. Now, consider these sessions as like a free training session. If you have the Trade Scanner Pro, you're going to get the most out of it because this is your opportunity to ask questions, to make suggestions. I mean, we have Stian, the developer here, and he's the one, he loves to hear suggestions and everything like that, and he implements them right away. So think of this as your learning opportunity. The Trade Scanner Pro, just so you know, is a confirmation tool, but you still have to do a little bit of work, okay? But the good news is that work is the easy part, and that's what I'm here to show you. I'm here to show you how to forecast properly so that you can get the most out of that tool. All right, so anyway, so before I begin, let me just talk about a couple of things here. If you check the links in the description, if you'd like to try out the Trade Scanner Pro for 14 days, there's a link right there for it, okay? You can try it for free for 14 days. Second, if you want to get our trade of the week, which actually is now trade of the day, you can sign up for that as well. What that is we have the Trade Scanner bot, which Stian has made some really, really good updates to. And the bot sends out signals by email. It's the same concept as the Trade Scanner Pro, except the bot is hands off. The bot is for people that don't really want to mess with the charts. They just want a signal just given to them. And that's what the bot does. If you want a free signal every day, you can sign up for that list right there. And each day the market rotates. We've also just put in we input a whole bunch of new asset classes, and it's much more, the bot has much more functionality than it's had. So great work by Stian as well. So you want to sign up for a free trade every day? There it is right there. Third, if you want to get into the Discord community, there's a link for that also. We have a nice free community chat where there's a lot of great information. We also have support channels for the Trade Scanner Pro and all kinds of stuff. Alex is also one of the moderators in there. He does a great job just answering questions and keeping the conversation going. So please check that out. Now, if you're interested in checking out some other exchanges like Bybit or MEXC and you're a non-US resident, consider the links in the description as well. Those are affiliate links, and they are Stian's affiliate links. So if you open an account, you fund an account, and you place trades, he gets a small cut. But it helps him a long way into supporting the community and continuing this great work that he does to make these great features available. Also, if you want to sign up for TradingView, you can do that as well. There's an affiliate link there. You don't need a premium version of TradingView to use the Trade Scanner Pro. Again, you don't need it, but it has some great features, like you can set multiple notifications and things like that. We'll talk about that more soon. And if you're not interested in any of these products, but you'd still like to show Stian some love, there's some wallet addresses in the description. There's a Polygon one. There's one for Ethereum. Please send him a donation. Again, it helps him. Everything helps. All right. Anyway, but thank you for taking your time here with me here today and everything. And let's get into this. All right. So let me just say hello to all my regulars. We got Stian, of course. He's the guy that you should all be thanking for all the great updates and all the other stuff that you see with the technology, because he's the one that's been putting in all that work. So good to see you, Stian. We got Armin. How are you, Armin? I haven't seen you in a while. Alex, all right. There's Alex, the moderator. We got Lad, Dijon. Good to see you guys. All right, Peter. Cool. All right. So let's talk about the economic calendar very briefly. All right. So I'm going to test you guys this week, and I'm going to ask you real quick, what do you think is important about this week on the economic calendar? Anyone? I'll let you guys have a chance here to guess. By the way, today is, while you're coming up with the answer, today is a holiday right here in the U.S. So no one's around today. I was not expecting a big crowd here, but you know what? I had some time and I'm not going to be able to stream tomorrow. So I figure let me do it today so that we can get this out of the way and we can be prepared for the week. Now, keep this in mind. We're in holiday mode and we're going to be in holiday mode probably for the whole week, which means lower volume, all that kind of stuff, right? All the stuff I talked about the week before. And as far as volume goes, we're not going to see a return to like more regular volume probably until next month. So again, next month, it takes a while for it to get back to normal. It's not like people just show up the next day and be like, okay, holiday's over, I can trade again. It doesn't work like that. It gradually builds back up to a more normal level. So I'd be looking for that like the first week of October. All right. So anyone want to guess what's important this week? Anyone? I'll give you a hint. It's probably the most important item every month. Dom, you got it. Non-farm payrolls on Friday. That's the only thing really worth mentioning. Yeah, there's a couple of other minor reports here and there. But, well, where do you see that? Well, that's not this week, is it, Peter? That's next week. I'm only interested in this week, right? So that would be Friday, non-farm payrolls. I know there's a Fed decision coming up and there's a lot of anticipation around that. And I've seen a lot of nonsense talking about that, but I don't believe that's this week. All right. So anyway, yeah, non-farm payrolls. Non-farm payrolls is next to a Fed decision. Non-farm payrolls is probably the most important economic scheduled event that comes out every month. It's the first Friday of every month. So it's important to know because the markets can get very erratic going into non-farm payrolls. And of course, when the event comes out, it can cause a big move one way or the other. The idea is not to try to guess which way the market's going to go. It's to be prepared for a range expansion and also not get caught. Don't have any big positions going on into that, stuff like that. Okay, but only you could make those choices. If you have a position with profit, perhaps you don't want to take that position going into non-farm payrolls. Now, keep in mind, it can be in your favor, right? But can also be against you. There's no way to know in advance. So don't let anyone fool you into thinking that. All right, so that's the economic calendar. Now, usually when we have non-farm payrolls, usually the Thursday, I think the Thursday before, you have like the ADP employment rate and stuff like that. That's supposed to give you like a kind of a glimpse into what non-farm payrolls will be, but it's not the same thing. Non-farm payrolls is its own isolated event, and you want to be aware of it and prepared for it. Okay, so that's all I'm going to say about that. If you have any other questions, let me know. If I missed something, let me know. Or if there's something that you think is important this week, let me know, and then we can talk about that. Again, this session is a training session for you so that I can teach you how to better process information. You know, the biggest problem in this game, the reason why this game is so hard, has nothing to do with intelligence or competence. It has everything to do with the quality of the information that you consume. And as retail traders, we are always faced with tons of misinformation. It's everywhere. Misinformation. And it's geared that way purposely because number one, they want us to trade so that we can lose, so that we can make others rich. If you think that the game is otherwise, you have a lot to learn and you're going to find yourself in an uncomfortable financial position very soon. Okay. So anyway, that's what I have to say about that. Let's move on to today's chart, shall we? All right, so I'm going to make myself smaller here. Just give me a second. All right. And now let's talk about Bitcoin. So I wrote my article yesterday on TradingView. And in that article, as you can see, this is the chart that I use, right? And I pointed out a couple of things in the article. I pointed out the article was mostly about confirmations, right? But I pointed out these pin bars that we're developing over here. That's what this arrow is pointing to. I have this purple rectangle here, which highlights an important level, right? The 56K level, which obviously we haven't reached. We bounced just above it. And then I have my illustration, this line right here. And that illustration is basically the scenario that I anticipate for the coming week. Now, this scenario is one of countless scenarios. The market does not have to follow this scenario. The market will do what it wants to do. But I suspect, based on my analysis, that this is going to be the more likely scenario of a narrow range of scenarios. Now, the whole point, though, is we can come up with all scenarios we want. If there's no confirmation, they don't mean anything. So that's really like the point of today's video, is confirmation, but not just on this time frame. I want to talk about confirmations on smaller time frames. All right, but before I get to that, let's talk about this time frame. This is the daily time frame. Now, if you look at my previous week analysis on TradingView and the week before that, I basically called this move right here, okay, that pullback off of the 64 into the 60K area. That's part of my illustration. I also called for this long movement here, okay, this push up to that area. So am I, do I have some kind of magical way of doing this? How do I call these? Unlike everyone else who tells you that they do have a magical way of doing this, I'm simply focusing on the most relevant information possible, quality information, which is available but is mostly overlooked. I use that, and then I put together what I think that means in an overall context. That is what I do. So when this information that I'm talking about is specifically two components: trend, support, and resistance levels. I repeat this all the time. People don't want to hear it because I know trend, I know support and resistance. Meanwhile, they keep getting it wrong. I got people who send me messages, oh, they're buying too early, they're doing this, they're doing that. It's like, you need to be able to do the forecasting, and then you need some way to confirm. You can't just step in front of the levels. Forecasting is easy. We can come up with levels and we can draw lines all day long. The market might follow that, it might not. The market is random. So this all goes back. The root cause, again, for everyone's problems mostly is they don't consider theory first. They just grasp whatever put in front of them, and then they believe all the nonsense that's fed to them by all these frauds who have no business sharing this type of information to begin with. But, they're usually trying to sell something or whatever. Okay, I get it. I know how the industry works. But the point is, it's your responsibility to understand this market, just markets in general, on a conceptual level, and then use that information to guide your decision making as you go forward. Now, this all goes back to efficient markets, okay? Let me just tell you a quick story about efficient markets before I continue this chart. Efficient markets is something that comes from like the academic world. Most people shrug it off. I mean, I myself had not learned about efficient markets until about 10 years into the game. When I started out in the 90s, okay, I had no clue what that was. And the books that I read, because where I worked, they suggested books. Because at the time, again, there was no Google, there was no information to look up on the internet, there was no Facebook, there was no Instagram, there was none of that. Okay, none of this social nonsense or thousands of fake gurus like we have today. None of that existed back then. So to learn about the markets, we only had one source, and that were books. So where I worked at the time, they suggested certain books. So of course I bought the books and I read them multiple times. I was very passionate and very interested about the markets, and I wanted to learn anything that I could. So it was either you spoke to people that were proven, and where I worked, seemed like everyone was proven because everyone was making money. I could tell you why now, but at the time I could not. And it was either speak to someone that's showing some kind of results or read books. Okay, so here's my point. In the books that I read, there was not one mention of efficient markets, not one mention. So, and I wasn't pursuing things on an academic level in those days. And it wasn't until I joined the CMT Association and I was pursuing my charter, where I had to read their materials in order to prepare for their exams. That is where I first came across this efficient markets concept. Now, why do I keep talking about this? I mean, I know no one wants to hear about it because it's boring, right? And you don't make money with efficient markets. Well, here's where it has value. Efficient markets, if you understand it and you grasp it, it will shape how you process information going forward, because it will basically prove to you that most people are lying to you and that you can't forecast markets accurately for very long periods out. So that's going to save you a lot of trouble. You're going to stop wasting your time with things like the RSI and all that other garbage, because you're going to realize that it offers no advantage. Efficient markets says that price is always at fair value and that markets are basically random. Okay, prices are random. Now, it's not 100% true. Even when I joined the CMT Association, their take on it, because they taught me about it, but their take was, well, it's a little bit true, but not really, because markets trend and history repeats itself. So and people make all kinds of money, so we'll just laugh it off. That's the impression that I got. So I still, at that time, hadn't really taken it seriously. It took me another 5 or 6 years for the idea for me to realize, markets are random. That's a big deal, okay? Because that, again, will shape how you process information. If you accept that markets are random most of the time, then you will be prepared for anything. And you will also understand the game from more of a random perspective. You will realize that in order to win, you must have a very specific advantage of some kind, okay? It could be technical in some way. It could be informational, as in inside information. That's an advantage over the market. Some people they know how to use technical information and process it in a way that a person cannot, right? That's an algo trader. And that gives them some type of advantage. But they're using public information. It's just they're able to process it efficiently, right? Whereas an insider, like a politician, they get inside information and they can make money that way, but that's illegal if we do that. Anyway, that's another story. So why do I bring up efficient markets again? There's one very important point that if you understood it, you would come to the realization that markets are more random. Why? Because one of the weak points of efficient markets is that it assumes investors are rational, right? And for decades, that assumption was laughed off because investors are not rational. Now, let me ask you guys a question. Let's see who's listening. Let's see who's paying attention. Are investors rational today? Yes or no? Are investors rational today? Because efficient markets is a true thing. It's a real thing. And it's made markets almost impossible today compared to the way things were 20 years ago. Things were not like this 20 years ago. I was there. I could tell you. So do you think that investors, they're just smarter these days and they're just rational? And that's why markets are more efficient? Lad says, never has been. Okay. But what do you mean by that? Never has been. So what's the answer to the question? Do you guys think investors are rational today or no? Like what has changed? I want to see. Lad says no. Okay. It's a good answer. So what has changed? Why are markets harder today? And they're only getting harder. Anyone know? If you guys know efficient markets, then this will make sense to you. I'm asking kind of a trick question here. Okay, so Peter says no. But markets are getting harder. And they're not the same as they were 20 years ago. Something changed. Okay, and it has to do with efficient markets. So you guys say investors haven't changed, right? Investors are not rational. Okay, so that part of efficient markets is still true. Investors are not, it assumes investors are rational, but we know that investors are not. So what has changed? You can say, I don't know. I know I'm going into a lot of theory here, but this is important. You guys need to know this. And I'll tell you, I haven't come across efficient markets from not too many guru type people. Very few people mention it. People have more, and there are many algorithmic. Okay, Lad, you got part of the answer there. Algos. Robots are rational traders. They're rational, as Seinfeld would say. Robots are rational, are they not? And 70% of all the volume in the US markets, at least, are algo. They're transacted by robots. So we are now competing with the majority of robots. Robots simply follow instructions. They're not tired. They don't get tired. They don't have to go to the bathroom. They don't need to eat. They never have an argument with their spouse. They never get depressed. They don't care if they lose. They don't care if they win. They are truly rational traders, and they follow instructions. If they fail, the developer steps in and he adjusts it. And now the robot is either they remove the robot and replace it with another one, or they update the robot. And the robot simply continues, right? It has nothing else to do but follow its instructions. Doesn't care about anything else. It's a robot. That is what we're competing with, and it has made markets extremely efficient. So efficiency is the enemy of the day trader, especially because inefficiency is where money comes from. Inefficiency is where people would make mistakes. I mean, that's back in the day, there were no algos. I mean, they were a minority. They were a tiny minority. The majority of the volume, especially in the NASDAQ, were all day traders, people. They made mistakes. And that's where money came from. Okay? Inefficiency. So today's markets are highly efficient thanks to algos, and they're getting only more efficient. So if you understand efficient markets, you should be better prepared, which means if markets are highly efficient, when some fake guru tells you, oh, Bitcoin is going to be at 100K in 1 month, they're lying, and you should see right through that instantaneously, because I just told you about efficient markets. That's how I can tell a fraud in 2 seconds, because I know efficient markets, and based on what they say, I can tell a fraud literally in 2 seconds for that reason. It's not because, I have all this experience and I know. It's for that simple concept, efficient markets. Google it. Okay, anyway, so that's my rant on efficient markets. Now, I bring all that up because, again, that's the starting point of where I shape my ideas that lead to calling the market, as you could see on my TradingView articles, and the market has been agreeing in recent weeks. It doesn't have to agree, but what am I doing? Like I said, I'm using 2 components that are overlooked: trend and support and resistance levels. I focus on those 2 components because those are areas where non-random behavior is likely to develop. This is where one of the basic tenets of technical analysis, history repeats itself, comes into play. Okay, there are 3 basic tenets: markets trend, history repeats itself, and then the efficient markets, which is price is always at fair value, basically, right? Those are the 3. So markets are not 100% random, but they're generally random. So we need to find the non-random parts, and this is going to be a repetition of human behavior, because who do you think buys at these support levels, right? So going back, I look at the levels, I consider the trend. There's no trend here on the bigger picture, right? This is a consolidation, which means there's no trend on this time frame. If I zoom out, yes, there's a trend. Trend is relative to the scope of the data set that you're looking at. Trend is relative basically to your time frame. So you have to know how to categorize that, right? On this time frame, there's no trend. But if I go to a 1-minute chart, there's plenty of trends. If I go to a 5-minute chart, I go to a 30-minute chart, there are trends on those time frames. Okay? But on this time frame, this is a consolidation, which means it changes. When I know this right from the start, consolidation, that shapes how I think about support and resistance levels. Because in a consolidation, what should I expect from support and resistance levels? Anyone want to answer that question? In a consolidation, what should I expect from support and resistance levels? Because I'm trying to form some kind of idea so that I can anticipate a behavior. This is where a trade idea begins. I need to anticipate a behavior before I do anything else. And then once I arrive at some sort of conclusion. I'm expecting, buying, or I'm expecting selling, right? I have to come up with a conclusion. Then I need confirmation. That's where the Trade Scanner Pro comes in. Peter says hold. Yes, correct. Range movement between them. Yes. So support and resistance levels, are most likely to hold. That's important, because if we were in a trend on this time frame and the trend was bullish, I can expect resistance levels to break and supports to hold. You see how the expectation changes? So I should not short resistance levels in a bullish trend. I should not buy support levels in a bearish trend, right? But in a range-bound market, I should be open to trying to buy support or trying to sell resistance. Now, you don't have to, but that's what you should be leaning toward. That's what you should be expecting, some type of behavior that you can forecast to occur again. Okay, so that brings me to where we are now, right? So support level 56K. Look at this time frame. This is the daily time frame. Look what's happening here. What is this candle, which is still open? What is that? Anyone want to tell me? What is this candle? This green candle, what do we call that? In fact, I mentioned it in my article yesterday, before it was there. What kind of candle is that? You guys following me so far? What kind of candle is that? You could say, I don't know also. What kind of candle is that? I specifically wrote about that candle before it was there. Lad, you don't know what kind of candle that is? Anyone else? Okay, I mean, that's a good answer. This is going to be tricky, though. This is going to throw you off a bit. It's going to be tricky. This is where like experience could kind of play a role in how I interpret this candle. But anyone else want to guess what kind of candle that is? I know why you inside bar, Peter says. Yes, inside bar. Now, Lad may say, but that's not an inside bar. The low is lower than the previous bar. Okay, but barely. If this candle was significantly lower, like if this candle was pushing like this low over here, something like that, right? Like much lower, then that would not be an inside bar. But this is, I mean, what's the low on this bar here? Basically 57,120, and then what's the bar before it? 57,200. I mean, on this time frame, 80 points is really not a big contrast. If it was a few hundred points, okay, right? Or 500 points or something, but I would consider this an inside bar. So technically, it does not fit the description of an inside bar. Okay, technically, it does not fit the description, but you have to be, remember, markets are messy. They're not precise. So in a situation like this, because that's barely, I mean, look how close the lows are to each other. I mean, that's 80 points. This is 80 points, okay, right there, that little area. 80 points. For this time frame, 80 points is meaningless. It doesn't count, okay? So I would consider that an inside bar, all right? I would treat that, I should say, I would treat that as an inside bar. So if that's an inside bar, and we close like that, and we take out the high of the bar, we have a buy signal on this time frame. The inside bar and break of high of the inside bar is the confirmation. Now, as you can see, I drew this line here because I'm anticipating a reversal in this area. Why? Because look how many times it's reversed in this area, right? I mean, this line, this 56K line right here, is a significant line because it's touched it numerous times. If we go back, it's touched that line a number of times, right? So I'm anticipating a repeat in behavior. At this moment, it looks like the market is agreeing with that. Now, of course, in the next couple of hours, this candle could completely reverse, turn red, and whatever. But the stock market only had a half day today. It's a holiday. Chances are this candle is going to close like this, okay? And the next candle is likely to take out the high, which is the buy signal on this time frame. Now, I'm emphasizing that because that's an important point. The title of today's video is confirming smaller time frames. So we can confirm a larger time frame It's easier, right? We can see the candles. But the thing is, what's the problem with the larger time frame? Anyone want to guess? I'm asking a lot of questions here. I want you guys to be proactive, right? This is a training session. Remember, this is a training session for you. So I want you guys, when you guys come out of these sessions, I want you to be able to say to yourself, man, I learned something new today. I learned about efficient markets. I learned about, the confirmation. I learned about the inside bar interpretation. I learned about all these things. That's how I want you to come out of this. And the only way you're going to do that is if you're answering questions actively, right? That's why I like to ask questions, not just lecture. So Lad says slow. That's not necessarily a bad thing. That's going to depend on the person. The person may like to work with a lower frequency, which is okay. The problem with this time frame is the risk is high. Okay, it takes a long time for the candle to close, right? Yes, that part is slow, but what is the size of this candle? For a lot of people, this is going to be very high risk. Sure, you could take a smaller position to mitigate that risk, but what is this? 58,825 is the high of the candle, and the low is 57,120. I mean, that's what, 15 or 1,600 points. Actually, you know what? Let me pull out the ruler here, and I'll measure it. This candle is about 1,500 points. Okay, this inside bar. Now, on this time frame, that's actually kind of low. Some of these candles on this time frame are a few thousand points. I mean, look at this candle over here. It's huge, right? So the thing is, this particular candle, it's 1,500 points, which again could be a lot for some people. If you're taking the long above the high, you're using the candle low to define your risk. And if you're not doing that on this time frame, the risk has to be relative to the time frame. If you're not doing that, then you're going to have problems. You're going to get stopped out a lot because you're taking risk that is too tight relative to what the market can do. Right? That's the whole point of going to smaller time frames. The smaller the time frame, the smaller the risk, but also the potentially smaller profit objective. Risk and reward is relative, or it's a function of your time frame. So the idea, going back to the Trade Scanner Pro that I try to teach, is you start out with your analysis on a larger time frame, so you get a sense of trend and support and resistance levels. And then you could work on a smaller time frame to get a better way to control your risk and align with the bigger picture. So you have a higher probability that it's going to give you the positive outcome, but your risk is smaller, right? And that is what helps build confidence. Okay. Well, the best time frame to find a top, not necessarily. The time frame is something you select because you're trying to control risk and you're trying to work within a certain parameter of reward risk, right? You may say, I'm okay with the daily chart. Some people like to swing trade and they're okay with the daily chart. Okay, no problem. There's no problem with that. Okay, I call trades on the daily chart. I've called many trades, using the daily chart. And every time I do one of these streams, it's all based on the daily chart. But the whole point of smaller time frames is to give you the flexibility to control your risk. Now you say, well, okay, but the profit objective is smaller. Yes, it is initially, your initial profit objective. But there's a thing called a runner, which is what the Trade Scanner Pro has, the trailing stop. And when you have a sustained move on a larger time frame, okay, like this, you get something like this, the runner or the trailing stop is likely to keep you in the trade longer, and you're more likely to capture that broader move without having to take the broader risk. That's the whole point. Okay, so this is why I start with the daily time frame. Well, for a longer time frame, smaller position, yes, that is correct, lad. You can use a smaller position, but the smaller time frame, you can use a larger position and potentially make more money because you don't need such a large move on the smaller time frame because you have a bigger position. And the less time you're in the market, the less risk you take. Okay? So good point though. So let's talk about the smaller time frames because that's the whole point. Now, we start with the larger time frame because we're trying to get a sense of trend and support and resistance levels. Now, notice something. I know I pointed out in this arrow here. Notice something, right? These tails on these candles. Yeah, let me draw like a little rectangle. See all these tails on these candles? Those are meaningful. Maybe not on this time frame, but on smaller time frames. Look how much price action occurred around this level. I mean, look how far I can go back, right? Price has spent a lot of time inside of this rectangle. I can draw a horizontal line and connect a lot of these lines together, right? Notice this horizontal line right here. Look at all these touches back here. Look at all these touches, right? Touch that line and it reacted in some way. Look at this, almost touched the line, touched the line, touched the line, almost touched, right? Broke the line, but touched here, touched here. So that means the level carries some kind of meaning, but not on this time frame. It's going to be a heavier weight on a smaller time frame. Why? Because on this time frame it blows through the level with no problem, but it still touches it often, right? It blew through the level on this red candle here. Like if you tried buying into that, you would have had problems. This is why we wait for confirmation. The point is, though, you had a level to anticipate. Look, if you were on a smaller time frame and you started, you could have anticipated this time frame starting back here. And every time it goes into that area, you could say, okay, I'm going to look for confirmations in that area. And you would have had a few that would have steered you the right way if you had the right idea going into it, meaning you were looking for longs when price was above and came back and tested it from above, right? So these pin bars potentially could have been areas where you could have been looking for longs on a 15-minute chart, a 30-minute chart, even a 5-minute chart. The point is, it's a minor area of support, okay? Minor means we can use smaller time frames. So let's do that. Let's take a look and see what took place there. So I'm going to draw a rectangle. As you can see, I have another chart here, right? I'm going to highlight those tails, right? And I should be able to see them on this chart. Are these the same? Oh no, this is Coinbase. Hold on. I gotta pull up the same chart. All right. So let's go to the Bitcoin. Hold on. Let me put that in again. Bitcoin perp. I have to make sure that the charts are the same chart in order for you to see this. On MEXC. Okay. So now they're both the same chart, right? If I highlight these pin bars, see how I'm highlighting them? See how the rectangle shows up on my other chart here? That rectangle, look at that. That's the same rectangle. But this is a 1-minute time frame on my right. Let's change this to a 15-minute. Okay. Is that 15-minute? Okay, no, that is a 15-minute. I'm sorry. No, I just changed this one to a 15-minute. So let's just change this one here to the daily. Oh, that is a daily. Okay. And this is the 15-minute. All right. Just wanted to be clear there. So this is a 15-minute time frame. So you see that rectangle is the same on both time frames. You see that? So let's turn on the Trade Scanner Pro. Oh, I just turned it off. Turn it on. Let's make sure we're in the right mode. Okay, we'll talk about that in a moment. And the idea here would be to try to find confirmations. Let's just assume for a moment that you use this first one as a reference, right? Because let's say you don't pay attention to the previous ones. That may happen. So you're using this first one as a reference, okay? The first pin bar, the first tail, because it bounced off of there slightly, right? So you're using that as a point of reference on your 15-minute chart. You're saying there is some kind of support there. It's minor, but I'm willing to look for the reversal. You come up with this in advance. All right. In fact, this is what it would look like. It would look like this. Okay. At the time, those other candles wouldn't be there. So you'd be like, okay, I have a point of reference projected into the future. This level is your point of reference. So you're looking for reversals from that level going forward. Okay. Now, when I advance these bars, okay, again, that's the second bar. There was a bounce off the level. So on this chart, that would be here. That would be this, okay? That would be that right there. You could have been prepared for the idea. Now, whether you catch that or not is another story, but you could have been prepared for the idea because you can anticipate it. Now, what do we get on the 15-minute chart without the Trade Scanner Pro? A pin bar. What a surprise. There was a pin bar here too. There's a couple of them. This one kind of failed, I guess you could say. It was worth a little something and it failed. And then it actually tested the level and it was worth something. Okay. Now that's just using the candlestick. Now let's use the Trade Scanner Pro real quick and see what the Trade Scanner Pro would have showed us. So I'm going to turn on the counter trend mode. Okay. And let's see. What does the Trade Scanner Pro show us on this time frame? Anything? Let's look around here. Let me turn on I have to turn on the previous trades. Hold on. I have everything turned off. So show previous trades, show heads up. Now let's see. Anything? Okay, so the Trade Scanner Pro, as far as the second test, because we're going to assume that you weren't involved here on the first one, although it was possible if you used previous candles, right? But let's just assume you weren't. So on the second one, it called this bad trade right here. That's what it gave you, a heads up, and then it called this bad trade nearby. It never called the pin bar on the bottom on this time frame, on the 15-minute. What if I go to a 5-minute? Let's see. Anything there? Let's see. What does the 5-minute tell us? There's lots of trades on the 5-minute. Look at this. Where's the actual one? Let me put an arrow on this right here so I can find the actual trade. Where is it? On the 5-minute chart. Where's the arrow? Is it going to show me the arrow? It's not showing me the arrow on this time frame. No arrow, huh? Okay. Well, what's the price here? 57,820. So that's this area right here, right? Let's just pull it up. What day was this? Oh, this goes back a bit. This is the 27th. Let's go back. That's probably why I don't see the arrow. Let's go back to the 27th. This is the 30th. Right? I have to go back a bit. Right? I think that's it right there. Let me put the arrow back up so I can find it. 27. There it is. Okay, so this is basically it. Right? This is basically the level right here. All right. What is this low here? 57,820. And I want to find that here. This must be it right here. Let's just make sure it's right. On the 27th at around 10 o'clock. This showing it on the 28th around 12. So that's probably, again, because this is a 5-minute chart. Let me advance this a bit here. 28th, and the low there is 58. Okay. So this is probably the level right here. Because we had this one first. Okay, no, look at this. Look at this on a 5-minute chart. I know this may be tedious for some, but you need to do this. Okay, look at this. So we had this touch first. This is your reference point. You're not doing anything here. This touch occurs first. You're looking for the second touch, right? Because you have a point of reference. This is it. Okay, see how the arrow lines up? That's it. So on a 5-minute chart, the Trade Scanner Pro called the trade. Now, thanks to one of Stian's update, if I roll over this, we can actually see the result of that trade. Okay, this was a suggestion by Savi, by the way, and Stian implemented this like in a couple of hours. So this trade was worth 781 pips based on what this says here. Okay, 781 pips. And you caught that right there, and you should have been prepared for it, is what the point is. You could have been prepared for it because you had the level in advance. You knew you were looking for some kind of signal there, all right? But you had to be in counter trend mode because most likely the trend at this time was bearish, and you're looking for bullish trades. So you would go into counter trend mode, right? Which you'd set right over here. So you see how that works? That was a quick example without explaining anything. This is the whole point of working with smaller time frames and aligning with your bigger time frame. You have your level in advance. You know what you're looking for in advance, and you're waiting for a confirmation on the smaller time frame. So let me ask you guys a quick question. What on smaller time frames, I don't even know how to. I want to answer this question in a way that makes you think, but I'm not sure how to ask the question. Let me think about it for a minute. So, what do you think is a major contrast when you're looking for your reference point, right, on these time frames? How do you think larger time frames and smaller time frames? All right, you know what? Never mind. I don't think you guys are going to get it. Let me just explain. Smaller time frames have their own support and resistance levels. That's really the point that I'm trying to get to, and they're minor, which means you can find other levels here, right? Like this level on this day right here, that becomes a level on a small time frame, especially like on a 5-minute chart, and that can be something like this over here. Okay, see that? That's a very minor level. The point is, these levels are only a function of this 5-minute chart. You can't rely on them for bigger picture moves, right? Unless they align with the bigger picture. So that bigger picture level, even though it's minor on the bigger picture, it's going to be very relevant on the smaller time frame. Does that make sense? I'm trying to teach you here how to use a smaller time frame to align with higher probability trades on the bigger picture. Now, if I advance this bigger picture, okay, like see how it touched again? All right, this is worth a nice intraday move. So you're looking for the confirmations on the smaller time frame because these are smaller time frame levels to work with. You don't sit here. The mistake to avoid is you don't sit here and think that you have this pin bar or whatever, and this trade is going to be this huge trade, because this is not a major level. As we advance this chart, the major level, as we know, is the 56K area. I mean, 60K, you can argue 59, 60K. All right, you can do some argument there. But the thing is, in recent price action, right, to get those bigger picture levels, you're looking at like 50K, 53K, 56K. If 60K can't hold, which it's proven here, it couldn't really hold very well, right? So you could say it's still in play. But my point is, if you're going to play these smaller levels, let's say these levels were not at 60K. Let's just say they were at, some random area. Let's say these levels were at like 68 or 67 or 66, something like that. You can still play them the same way I'm describing here. Okay, does that make sense? So you're using your smaller time frame to try to align with these smaller movements, and you're expecting smaller movements. Now you say, well, how do I know how to do that? This is where the trade scanner comes in. All right, the trade scanner defines your risk and your reward particular to the time frame you're on. So let me explain. Let me show you now how that works. Let's jump over to the Trade Scanner Pro. I'm going to jump over to the 1-hour chart over here. You guys following me so far? Do you understand my whole point of confirming smaller time frames? And if you do understand, I'd like someone to explain to me here in the chat real quick. Can someone just explain what I just explained to you? Give me some feedback. I want to make sure you understand that concept. Okay, you're using the smaller time frame to confirm a minor level on the larger time frame, and you're working with the smaller time frame expectations. Okay, 24-hour is better also for invest. Yes, lad, that's correct. The daily chart is much better for investing as well, but you want to make sure that you're only working with particular levels. But also, when it comes to investing too, your sizing is a very, very important part of that, right? So I'm not going to get into that now, but for example, when Bitcoin is fooling around lower levels like it's been, that you can justify putting on larger allocations based on your overall plan. I've mentioned that in other streams, but if I get into that, I'll spend 15 minutes talking about that. I'm not going to get into that now, but yeah, Lad, you are correct. So you guys understand what I'm talking about here with the smaller time frame, using a smaller time frame to align with a bigger picture level, but the level on the bigger picture is a minor level. It's not a major level. It's like those little pin bars I was showing you. You find one, then you're looking for another one. It may not appear. It may not bounce the same level, right? But there is a tendency. It may. And the way to capture that is by looking for confirmation. So I pointed out you could have found confirmation on that previous example. There was a pin bar there. But if you don't know how to do that, you can use a Trade Scanner Pro because it is a confirmation tool, right? So let me segue now into the Trade Scanner Pro, what it is, how it works, and how it fits into this whole thing. So the Trade Scanner Pro is hold on, let me pull this up, a trend following momentum reversal system. It's based on criteria that I use for particular types of trade setups. So here's how it works. First, it looks for a trend. It defines the trend, and it tells you the trend up in this little box up here. It says trend is bullish or trend is bearish. So in this example, right, it defines a trend. Trend is bullish. Second thing it does is it looks for a pullback in that bullish trend if the trend is bullish. Once the pullback appears, it measures the momentum and changes in momentum on that pullback. And once certain criteria are met and the momentum reverses, it will give you a signal in the form of a trade suggestion. The trade suggestion looks like this. It has a stop loss, it has an entry price, and it has a profit objective, okay? The profit objective is typically 1.5 times the stop loss. The stop loss is generated from market information. It's not something you input. It's something that the market tells you. This is why it's such a valuable tool. People make the mistake and they put in their own number. The Trade Scanner Pro generates it off of previous price action. It says, based on this time frame, this is what your risk should be, okay? And that's the stop loss right here. Now, it takes that amount and it multiplies it by 1.5 times, and it projects a profit objective. That's what this is over here, the profit objective. You can change that ratio, all right? If you look at the Trade Scanner Pro, right, it says here 1.5. That's the ratio. You can actually change that to whatever you want, but it starts out at 1.5 to 1. So that means if you use a Trade Scanner Pro properly and even if you win only half the time, which is a reasonable assumption, you should actually come out slightly ahead. Why? Because when you win slightly more than what you lose, right? When you lose 1. When you win 1.5. That's a very important part of the whole thing that people don't realize, okay? Now, that's what it looks like when it calls a trade, all right, in the form of trade suggestions. Now, you have to respect the levels. You have to respect the stops. One main feature of the Trade Scanner Pro is it has a trailing stop. And the trailing stop appears after some time and will begin to follow your trade based on the closing candles. And it looks something like this. It just starts to follow the trade, right? And eventually the trailing stop is tapped out. You don't have to use a trailing stop, but it's a great reference point because it allows you to make more than 1.5 to 1 when the market wants to pay that. And sometimes the market does, especially when you catch it at a major level, like a 56K or a 57K, and it decides to run to 64K. Instead of capturing, 300 points, which may be your profit objective, you may be able to capture more than that, maybe 4, maybe 5, maybe 600 points. In wild markets, when the market doesn't pull back, you can capture big moves, okay, which you would normally not be able to capture on your own, because normally you would most likely get out at the first sign of trouble, right? The trailing stop gives you a visual reference to stay in. Anyway, that's how it works. Now, there's a special mode called counter trend mode, okay? And what counter trend mode does, let me just remove this, is it ignores the trend and it will call a trade here. That's where it'll pull out the trade suggestion in a bullish trend, for example. Counter trend mode is advanced and is not something I recommend for beginners until you first get used to how this thing works. Use it in trend mode. In fact, the Trade Scanner bot only works in trend mode. It doesn't work in counter trend mode, and we purposely set it up that way because counter trend mode is normally lower probability unless you're picking your levels specifically, right? That's why I put that mode in there. That's why we put that in there, so that you can go into counter trend mode. Like, for example, in a situation like this, only counter trend mode will help you capture a move like that, because this trend on this time frame is bearish. So most likely it's going to be in bearish mode, looking for bearish trades. You have to recognize the level. You have to anticipate that buying behavior is likely to appear there, and you need to turn on counter trend mode in the settings. Okay. Lad says smaller time frame is just for a small time frame. If larger time frame align with smaller time frame, it's great. Small time frame level is to trade on that time frame. Yes. Okay. That's pretty much a good summary. Okay. So each time frame has its own support and resistance levels. Okay. So that was really like the main point of that. Okay. It sounds like you got it. It's a good explanation. Yeah, I'll put that up for people to read. Okay. That's how Lad summarized my lesson. Now, so let's talk about the settings real quick. I'm not going to spend a lot of time on the settings. All right, here, let me just advance this chart over here. Okay. We actually, there's a signal there. Let me just turn that off for a moment. I just want to show you the settings first, real quick. Okay. Because when you get the Trade Scanner Pro, which again, there's a 14-day free trial, it comes like this. All the settings are turned off. So you have to go to the settings panel and you have to turn them on. We made it like this because some people, they like to customize things a certain way, more experienced traders, and they may not want certain things on. So you have a choice. But as a beginner, I suggest you turn them all on. So you turn on the trailing stop, you turn on the show previous trades, you turn on the heads up, and counter trend we will leave off right now. Okay, we will leave that off for now because that's something you have to make a conscious decision to turn that on. Now, I turned all those things on. Let me turn the Trade Scanner Pro on here. If you notice, right, the historical trades, that's pretty straightforward. That's these previous trades here. And again, you can see what they're worth by rolling on them or clicking on them, right? It tells you what they were worth, if they were a winner or not. You can see there's a current trade in play right now, and you can see that the trailing stop is in action. This is a 15-minute chart. As a beginner, I suggest starting out with 15-minute charts, okay? Because anything less, it's going to be confusing. You want to get used to that. You want to get used to this thing first, right? By the way, there's a great video. We're going to include the link in our invite emails, but on my YouTube channel, I conducted a meeting on July 3rd, and in that meeting, I give you 5 specific steps on how to use this most effectively. So I suggest you check that out if you're new and you want to learn how to use this. Now, so we turned on all those settings. One thing I want to mention here too is you notice these green lines, right? These green columns. These green columns are highlighting these yellow candles or orange candles. These orange candles that I'm pointing to here are what I refer to as heads up. Heads up is a warning. It tells you that a signal is likely to appear soon. So this is very valuable because on TradingView, you can actually set up notifications, right? See, you can set this notification up here, and you just pick the Trade Scanner Pro, and you set it. On the free version, you can only set 1, but on a paid version, you can set more. This thing will tell you when a heads up shows up. So you don't have to sit in front of your computer for hours. It will also tell you when a signal appears. It will also tell you when a stop is reached. So again, on a 15-minute chart, you don't want to sit in front of your computer for hours, waiting and waiting and waiting. You want to wait for the heads up so you can go about your business, go do something else. And then when you get the heads up, maybe you start watching, or at least you're prepared. In the next 3 to 5 candles, a signal is going to appear, most likely. Not guaranteed, but most likely. So on a 15-minute chart, that's 30 to 45 minutes, maybe longer, before a signal is likely to appear. You said, well, that's too long. Okay, so go to a smaller time frame. But like I suggest, in the beginning, start with a 15-minute, get used to it if you're a beginner. If you're more advanced, then you could basically make this your own. That's the whole point. Now, so you get an idea here of what's going on. There's a long signal in play on Bitcoin right now. It's gone through this line, look, the entry price a few times. So there were a few entries here. It never stopped out. It never went to the full stop. One of the great things about the trailing stop here is it's constantly working to do what? Reduce your risk. Okay, if you respect the trailing stop, which is what you should do, right now, this risk has been reduced by this much. Okay, if I measure that, how much is that? This risk has been reduced by about 50 points. That's not much, but what is the max risk here? The max risk is 210 points. on a 15-minute chart. That's kind of low. 210 points is your max risk, okay? This thing has reduced it by 50 points. So your actual risk, if you bought at the entry price, should be 153 points, right? But your profit objective stays the same. So your reward risk increases. This is built into the Trade Scanner Pro. The idea is so that over time, your reward risk skews in your favor, okay? That's a very, very valuable thing. Again, beginners have a hard time appreciating that, but someone with a little more experience will be like, wow, that is so cool, right? Okay, because that is how you increase your chances of a positive outcome in your account over time. That's how it works. All these people that think they're going to turn their $500 account into $10,000 in 2 days, go follow TikTok morons. Okay, you're not going to. That's not real. It's all fake. You'll find out that you'll find that out the hard way. On my streams, we talk about reality, and reality is not fun. All right, that's why no one likes to watch me. Anyway, so you get it. All right, cool. Now I think I've talked enough about that. I think I've showed you enough features. Let's see if we could find a trade. All right, I'm in like an hour here. We have a few minutes. Let's see what's going on. Now, again, it's a holiday. It's quiet. Stock market's closed. I'm going to switch this. Wait, we have an hourly chart on this side, right? So I'm going to get advanced very quickly here. On the hourly chart, I'm looking for support and resistance levels. Now, what is my trend? Let's turn the Trade Scanner on. The hourly chart is actually showing me a trade here, right? But let's see, what's it saying? The hourly chart is telling me it's a short. Look at this. Interesting. Okay, trend is bearish. There's a short trade that's open on the hourly, but there's a long trade that's open on the 15-minute. That can be confusing. So which one do you go with? First, the answer is first, you ignore the signal. You have to come up with an idea, right? You have to ignore the signal. Turn them off. Don't jump in on a signal. Don't jump in on the signal. Hold on, let me turn this one off. Don't jump in on a signal for the sake of taking a signal, okay? So first we have to arrive at an idea, like I said before. So real quick, right, we talked about the daily chart. This is an hourly chart here, okay? Again, there's some kind of level here. Now, my trend, as defined by the Trade Scanner Pro, when I turn it back on, the trend says bearish, okay? So that I can pay attention to, or I can assess that myself. I see lower highs, right? Lower high, lower high. We broke this support sort of, but we also know on the bigger picture, we're near a pretty significant support, right? So we have to keep that in mind. But when I'm going to trade on a 1 minute chart, I'm only looking to get in for, a couple hundred points maybe. So I could be more aggressive. I don't have to be so sensitive to that 56K low unless we're like right on it, right? This is more advanced now because now I'm going to be focusing more on a 1 minute chart. So this here's a 5 minute. Let me switch this over to a 1 minute. Okay. 1 minutes are not a good idea for beginners, but I like to show them because there's a lot of action usually. So I need to come up with an idea. I know that there's a support around here. Let's see, do we have any resistance around where we are right now? Yes, there's something here. Look, there's old support, right? Broke, resistance. Okay, so I can argue that there's some resistance here, even though this structure is bullish, all right? Higher low, higher high, but it went right into a resistance. We have a higher low developing right here, okay? That's the long signal on the 15-minute chart, okay? Meanwhile, the hourly shows a short signal that's in play. Which one is likely to win? Well, because we know where we are in the bigger picture, I would actually be betting on the bullish reversal because of the level on the bigger picture, right? So I keep that in the back of my mind. But as a day trader, I see, okay, we're at a resistance. All right, we're likely to break that resistance, especially in light of the bigger picture. I have to keep that in mind. So now I have to decide, which way am I going to play this? Which way am I going to go? Am I going to go with the short or am I going to go with the long? Which idea? Which idea would you guys go with? I hope I'm not confusing people. Which idea would you guys go with? And while you guys come up with that answer, I'm going to type the link here into the chat. make sure that that's correct. I think that's correct. That's we'll talk about that here in a minute. Let me see. It looks like it's correct. Okay. Anyone want to answer that? Which side would you take, long or short, based on everything I just talked about? Right now, we're thinking on 1 minute. Now we're thinking on the 1 minute time frame. And I'll turn the Trade Scanner Pro back on here. All right. So now it's on. Notice too, when I turn them back on, right? The Trade Scanner Pro on the hourly says the trend is bearish, but my minute chart says the trend is bullish. Interesting, right? Don't be confused by that. Yes, you could say, well, the hourly is more larger time frame, so it carries more weight. Yes, that's true. But experience tells me don't ignore the structure. Higher low, higher low, higher low. This structure is bullish. The general trend may be bearish, but this structure right here is bullish. And as a 1 minute trader, in this case, I'm only interested in taking a bite out of this little mini bullish trend. So, anyone want to answer the question? Which way should we go? I just kind of gave it away. Which way should we go, long or short? What should we be thinking? What should we be looking for, long or short, on the 1 minute? I'm interested in the 1 minute. Now, let me turn this on over here. And let's see. So I got everything is set up except for counter trend. No one wants to answer the question? Anyone still there? All right, so while you guys have come up with the answer, I'll give you the answer. I should be looking for longs. Okay, now if you notice something here, I got no longs. Okay, it looks like the candle is trying to work its way higher here. So you would go short, counter trend. You would go short on the 1 minute, because remember, the larger time frame is our forecasting chart. The smaller time frame is our action chart. This is where we're actually going to take the trade. This is where we're going to define our risk and profit objective on the smaller time frame. The larger time frame gives us perspective and context. Okay, long. Okay, long. Right. So, but we're using the 1 minute. So I don't need to go. The 1 minute is bullish. If I go counter trend here, it's going to be giving me bearish signals, right? So remember, it's relative to the time frame. So I know I want to go long. I don't really need to look at the hourly anymore if I know what I want to do now, right? So here's my 1 minute. There hasn't been a signal on the 1 minute since back here. Okay, wow, that was a nice signal. What was that worth? 197 points. All right. I want to go long. We have not seen a long signal for quite some time here on my 1 minute chart. What do I do in that situation? Let's see more of my more advanced traders. What choices do I have? Who wants to answer that question? I haven't seen a signal in quite some time. In the 1 hour, is that resistance at the support high? Well, on the 1 hour, let's go back. And by the way, guys, use this time to ask questions. Here, let me turn this off. Use this time to ask questions. This is your opportunity to ask questions specific to trades, to using the Trade Scanner Pro. Again, it's a training session, okay? Lad says, is the 1 hour at resistance? So, Lad, this is a minor resistance, right? We know that this generally, there's a lot of support below this level here. We know that, okay? There is some resistance here, but we know that this Bitcoin is coming off of a major support area. Remember, this structure is the inside bar we talked about. Remember the inside bar in the daily? This is the inside bar. This is what it looks like when you zoom in on it, okay? We take out that inside bar high up here. That's going to be a long signal on the bigger picture, right? Remember all that? That's going to be hard to remember when you're trying to get into this type of detail, but you have to keep that in mind. So with that in mind, I'm interested in working on the long side, okay? Even on the 1 minute, I'd like to align with that. So I'm going to go with that idea. Plus, if that idea was not present, I still have a bullish structure. Higher low, higher high, higher low. Higher high is likely. Resistance is likely to break, right? It's a small trend, but it's a trend. So I'm interested in the long. Now, my question now is, what do I do if I don't get any long signals, but no, I mean, the market's been going higher here. I mean, look at this nice little move. There's no long signal there. Look at this move, a little higher low, no long signal. This move never produced anything. So we're pulling back now. Okay. Maybe I'll get a long signal soon. I don't have any I don't see any heads up. All right. The heads up usually gives me some warning. Look, like over here, I had heads up before the signal. Right now, I'm not getting anything, right? So what are my choices here? Anyone want to tell me? What are my choices? I would like to take a 1 minute trade, and I'd like to take it on the long side. So I've figured all of that out in advance. There's no signal here. So what do I do? People who have the Trade Scanner Pro, you should be able to answer this question. I know this is advanced because it's a 1 minute, but I like to challenge you. What options, what choices do I have here? I'll give you a hint. I pretty much have two choices. Lad says, wait for a pullback and confirmation, or what? Set time frames? What was that? Can you be more specific on that? The first part of your answer there is correct. Wait for a pullback and confirmation. Yes. My first option is I can wait for a signal on this time frame. And as you can see, there hasn't been one since back here. Right? Since back here. How long was that? How long is that? 140 minutes. So that's 60. That's almost like, that's what? Almost, it's like 2.5 hours. No signals in 2.5 hours. You want to sit in front of your computer for 2.5 hours? No. You could set notifications. Oh, that's a third option. You could set notification and wait, but that's basically waiting, right? Was that second time frame? Do you mean smaller time frame? Oh, second, as in sub 1 minute time frame. Yes, Lad got it. That's correct. You can go smaller than a minute. Okay, not something I suggest, but the concept is very important. So, like for example, if you're on a 15 minute, if this was a 15-minute chart, and you're like, I want to, no signals are showing up, you can go to a 5-minute chart. Maybe you go to a 3-minute chart. Right? So when I'm on a 1 minute, oh, look, we're getting a warning. And when I'm on a 1 minute, I can go to a sub 1 minute time frame. Now, again, it's not something I recommend because they're really wild and out of control. It's for more advanced traders. Plus, you have to have the full version of TradingView in order to see those. Okay? If you don't have the full version of TradingView, you can't go below 1 minute. But it's not something I suggest. But since, look, we got our pullback and we're getting our heads up, we might as well wait, right? We have our orange candle. Okay, beautiful. So let's turn on the order book, okay? And let's see what happens. So this orange candle is telling me that in the next couple of minutes, a signal should appear. So I'm prepared, and I know what I'm looking to do. So I went into this with an idea. I went into this looking with the idea to go long, right? So I'm not sitting here waiting for a signal to pop up and then I'm just going to react. Do you see the contrast? I went into this with, I'm looking for long, and we talked about why. Okay. So I'm going into this with a specific idea. So I know what the long should look like. It's a pullback. So now I got my heads up. So now I'm prepared. So the next candle may give me the long. Let's see what happens here. Now, this could be tricky to sit through because you know what happens? If this bounces hard and we get a big candle, then what's going to happen is the signal will be skipped over. A signal won't appear because the candle can't get too big. See how it's getting big like that? The signal may not appear now because that candle might be too big. Let's see. It's based on the candle close, by the way. Okay. Does the kind of consolidation in minutes is a good sign at a large? Yes. That's a good question, Lad. These consolidations, like on the 1 minute, like that kind of price action there, yes, that's supportive price action if you zoom out in the bigger picture. Because look, I mean, it tries to go lower and it can't. It couldn't go lower than this low, right? So these consolidations are important on smaller time frames as well. And they usually coincide with something on the bigger picture. Okay, so the candle closed and I never got the signal, right? Because this candle is too big for the 1 minute. Now, at least I'm not going short, number one. So let's take a look at a 15-second chart. Was there a signal on the 15-second chart? No. There was one way back there. Let's look at a 30-second chart. So now I'm going sub 1 minute. Anything? Yes, look, the 30-second. The 30-second had a signal. Okay. So, again, that's what happens when the 1 minute moves too fast. Like in this case, right? The 1 minute's too big. It's not going to give a signal now, right? Because this candle was too big. That's going to happen. It filtered out the signal. So I had the heads up, but it filtered out the signal. In order to capture that, you have to go to a smaller time frame. So again, that's advanced, but I show this because if this was a 15-minute chart or a larger time frame, you should know to go to a smaller time frame to find the signal. One of the advantages to doing that is it's going to give you proportionally smaller risk. It's going to have a lower risk profile. You understand? Because the smaller time frame, the smaller the risk. Your risk, I guess you can call it, you want to get fancy and give it a name, you can call it a risk gap, because it's the gap is between your entry price and the stop price. That's your gap of risk, right? Smaller time frame, the smaller the gap. So I can't do anything. I'm not going to chase this now. Well, that would have been a nice trade. I can't do anything. Now, I could start looking for counter trend, but that would be kind of a bad idea since I'm not at a major level, right? And if I was going to do counter trend on the short side, which again, if you're going to be an aggressive day trader, if I'm going to do it, it needs to happen like way up here. Like it needs to happen at the level. Like it needs to happen up here. See that? If I'm going to do it, it needs to happen up there. Not anything sooner than that. Because then you're asking for trouble. Now, in this situation right here, see how it's kind of pulling back again? Again, this is a 1 minute chart. Things change very quickly on these time frames, right? So you can't overreact to what you see. It looks very dramatic on a 1 minute. What I can do here is this may be an inside bar developing on the 1 minute. We'll see. I can look at my 15-second chart to see if I can capture a continuation pattern. Let's see. This is what's happening on the 15-second chart. Okay. I mean, that pullback turned into nothing. All right. I'm not going to go any lower than, I can actually go as low as a 5-second chart. I think I can even go to a 1-second chart on this, but that's kind of just pointless. A 5-second chart, a 15-second chart is nuts. I shouldn't even be looking at this, but I want to show you for demonstration purposes, right? Like if we happen to catch something like this and we manage to stay inside of that because the stop is tight enough. I mean, the stop is wide enough. It helps us stay into the move, right? But I don't know what the stop would be on this. Let's see. This actually got stopped out for 16 points. But that's, again, this is 15 seconds. So if I get a signal on such a small time frame, I may have to switch to the larger time frame for the stop, but there may not be a signal there. That can be confusing. All right, but let's just see what happens here. So I got a few more minutes. You guys have any questions so far? Are you able to follow me? So all right, while we're waiting for something, let me just explain to you. If you want to use the Trade Scanner Pro, you want to try it out for a 14-day trial, you go to this link that you see on the screen here. There's also a link in the description. It takes you to this page. This is my website. Okay, explains what the Trade Scanner Pro is, tells you about me. You keep scrolling, it takes you here, and then you can sign up for the 14-day free trial. So you can pay yearly, which comes to $22.50 a month. If you pay yearly, that's $270, right? Or you can pay $30 a month. That $30 a month price is going to rise. It's going to change. Once we have our overlays, it's coming, okay? So you still have some time, but I'm just letting you know. If you want to try this thing out, you press subscribe. It takes you to a sign-up page, which I'm going to show you real quick, okay? And here's a sign-up page. Make sure you fill this out. And in this sign-up page, make sure you enter your TradingView username in that field. It's very important. If you don't, you're not going to get the invite, okay? So once you fill all that out, you should get the invite on TradingView for the script, usually within 1 hour. So please be patient and wait sometimes less, but usually within 1 hour. If it takes longer than an hour, then feel free to message me and send me 10 million emails about how you haven't gotten the email. But if it's been less than an hour, please don't send me 10 million emails. People actually do that. They send me all kinds of emails. I haven't gotten the invite yet. It's like, dude, it's only been 5 minutes, right? So please be patient. It's usually less than an hour. So that's how you sign up for it, okay? 14 days, you can cancel any time. So let's see, am I getting a signal here or what? So we have a little pullback, right? So again, this is why you don't want to react to these big candles like this, especially on sub 1 minute. They don't really mean anything. It's a lot of noise. This is random price action here, like we talked about before. All right, so let's see if I can get a signal. All right, my trend here on this 15-second time frame is bullish. So I'm looking for the continuation, right? I'm looking for a long signal. I should be expecting that. But we talked about that earlier before. Okay, here's my warning. Here's my heads up, right? The green column. That means this little tiny candle, which we can't see in there, is orange. That's what that means. You could change that color, by the way. Oh, it vanished. Okay. You could change that color, by the way, if you don't like that. You could also make it invisible if you don't want to see those columns. You have all that customization ability on this menu right here on your settings. You could change all the colors right here. Very cool. Okay. So I'm waiting. Let's switch time frames a bit. Let's take a look at a 30-second. Anything? Okay, nothing. It's my 30-second. Nothing there. How about my 1 minute? Anything? Let's see. 1 minute. That would be a great spot for a 1 minute. So let's see. Maybe the 1 minute will develop into something. If I'm going to take a signal, I prefer the 1 minute over sub 1 minute. Okay, because this is at least a little bit more reliable. A 1 minute is wild enough. Sub 1 minute is really like, you have to be advanced to understand it because it's just very noisy. Okay. Any other questions so far? Any questions? It'd be nice to see a signal here, but it's good that we're getting the pullback because we're closer to a signal. Right? We want to see something like this, but we never got the signal on this time frame. It showed up like on the 30-second. So this time I'm going to catch it. Okay. Let's see if Bitcoin wants to cooperate. This is the perpetual futures contract, by the way. All right. You could do this with spot as well. Now we got a pin bar. Interesting. See that? I pay attention to the candles. Although if you're using TradeScanner Pro, you don't have to pay attention to the candles because it's doing the job of candlestick analysis for you. All right, I'm going to go to the 30-second because I'm looking for the signal. Okay, I don't have a heads up here yet, but as you can see, this is definitely a pullback. How about the 15-second? I'm checking the time frames. I'm jumping around time frames. Oh, look, a signal. On the 15-second, it appeared. I never even got a heads up. It just appeared. Okay, now, again, this is 15 seconds. I'm going to buy 2 contracts. It's at the entry price right now. Okay, I just bought 2 on the 15-second. Again, I have to remind you, this is wild and not very, look at that, right? It's wild and can do a lot of wild things. So I got long based on this entry price here. It's almost at the profit objective, but this is a 15-second profit objective. I could take some profit off now if I want to, right? But you know what I'm going to do? Let me just check the 1 minute. Is there a signal on the 1 minute? No. Let me just check, because if I get a signal on a larger time frame, it's possible to have multiple signals running sometimes. And if you have that, it's better to take the information from the larger one. Okay, but I don't have any. I checked the 30-second. I checked the minute. There's nothing there. So I'm going to have to work with this. Okay, we just popped right through the profit objective. The trailing stop hasn't even had time yet to appear. It usually takes a few candles before it appears. I'm going to take profit off the table. There's the trailing stop. See it? I'm going to sell 1 just because we're beyond the profit objective. Okay? I'm just going to do that. It's a good habit to be in. Now, I'm still long 1. Okay? I'm going to let the trailing stop determine the exit on this one. Now, keep in mind, this is a 15-second chart. You realize in 1 or 2 candles, this thing can turn around and go straight to the stop. It can happen. right? But this looks nice. How much am I up on that? Up like 50 bucks. All right. See what I mean? See how quickly it turns? So I locked in one. And let's see if the trailing stop can keep me into something here. Let's see if this thing wants to continue or not. You cannot react to what you see. Like, should I jump out of this thing because that candle looks ugly? No, it's a 15-second candle. Things happen very, very fast on this time frame. That's why I prefer, like, 1 minute or something higher, right? But this shows you, I mean, you want to see action. This is action. Look, my trailing stop has now moved to break even, basically. So this is a risk-free trade. So because I closed one at the profit objective, and if I blow out this one at break even, I lose nothing. I'm ahead because I locked in the profit on the first one, right? That's the nice thing about having multiple contracts. So look, we're back up here again. Like I said, I'm going to let the trailing stop guide my decisions. Notice, I'm no longer in the decision-making process. The Trade Scanner Pro takes that over for me. I just follow the order suggestions. This simplifies the whole process. Now, many people would have just banged it out on the red candle. Oh, you're pulling back, I'm getting out. I'm just following the order suggestions. The trailing stop kept me in. If I really want to be aggressive, I just hold it till the stop. Okay? It keeps me in. And it's now up to the random nature of the market. The market this can turn into a nice winner, or this thing may stop me out for whatever. The point is, I am out of the equation. It's up to the market now. That's a big thing, especially for beginners. I know it may be hard to appreciate, but taking yourself out of the equation is what helps you align with what the market wants to do, not what you think it wants to do. You thinking that you know what it wants to do is a big problem. Okay, so look, the market tells me what to do. I may have to get out here. Let's see. I'm at break even on that one. It's wild, right? But this is a 15-second chart. That's it. I know what I'm getting into with this. Yeah, so 1 hour, 4 hour, Peter, that's 1 hour is good because it's slower. It makes more sense, right? It's not as wild as this. 1 hour, 30-minute. You find your configuration. As long as you're using a larger time frame for perspective and a lower time frame for your action or for your risk, basically, right? For your trades. That's the general idea. And you find a configuration that works for you. I like to show these small time frames, not because I like to trade these. It's because you can see the action and you can see the script in action. Because obviously, if I was looking at that 15-minute chart before, it takes forever. It would be for hours waiting for something cool, right? This, you see this thing moving. You see the action. So you want the same idea, but of course on larger time frames, and it's not this wild. You have plenty of time to make decisions. Make sense? So look, my trailing stop is stuck here. It's not moving, right? Because this thing needs to start pushing up here for my trailing stop to continue. Right? It's following the price. Okay? And it's based on the close. So every 15 seconds, the trailing stop wants to move, but the price needs to do something like that. Again, it looks very dramatic, right? It looks like I'm making hundreds of points here, but I'm not. It's only like 10 or 20 points. It's a 15-second chart. See how that works? Any questions? Let me go. Let's scan the 30-second. By the way, okay, nothing there yet. How about the 1 minute? Nothing there yet. See, the 15-second chart got me into a trade that otherwise I would not be able to get into because there's nothing on the bigger picture. There's nothing on the 1 minute or the 30-second, right? So that's the advantage to using smaller time frames and having confirmation, because the Trade Scanner Pro is a confirmation tool. Isn't that cool? Hey, good to see you. All right. So, yeah, all right. This thing is just not going anywhere right now. No problem. I'm still waiting for the trailing stop. Now, again, so just to kind of recap here, the key advantage to using something like the Trade Scanner Pro is it simplifies your decision-making process. It defines the risk for you very clearly. It gives you a profit objective very clearly. You could use it on any time frame, on any market. Now, like I said before, we're working on overlays, right? Steen is soon going to have an overlay which calculates support and resistance for you. So you don't have to do that anymore, right? That's an extension of the script. So it's going to be separate, but it's going to be able to calculate the levels for you. So you have a point of reference there. So that's less work for you, even less work. And then the next extension we're going to have after that is going to be a table that you can actually input your own symbols, whatever symbols you want, and whatever time frames you want. And then the table will show you what's happening across your symbols, across multiple time frames, without you having to jump across charts. Imagine that. Okay, it'd be like a table on your chart, and the table will tell you what's going on in symbols of your choice. So you may have things occurring like on a 15-minute, on a 30-minute, on an hourly, and then you could jump to that and you can work with it because you know what's going on. It's going to give you a very broad overview of what's going on in symbols that are only important to you. All right, very cool. All right, so when we have those extensions in place, you're going to see some price changes in the subscription price. Tell me my name in the chat. But tell me my name. Okay, now I see you. I just have a hard. I could see what you're typing and just have a hard time. We'll go to upside. I see your question. Well, I'm hoping it goes to the upside, but I don't know. It's not up to me. I'm following the script. Right? I'm following the Trade Scanner Pro. I'm long. The Trade Scanner Pro told me to buy it here. I anticipated a bullish move because of some analysis that we've done earlier. Okay? I got long on the signal on a 15-second chart. My stop is defined. We're nowhere near it. My trailing stop is right here. This is actually a risk-free trade. I locked in one. I had two contracts. I locked in one at the profit objective. Okay? And my second one is I'm still long. And if I get out on my trailing stop just moved again, I get out here. So this is a guaranteed profit if I respect my trailing stop. Do you see how that works? So I don't know if that answers your question. But yeah, go back and watch the stream because again, I'm showing a very specific example to the Trade Scanner Pro. Oh, look at that. Man, that's nice. See what I mean? I would have gotten out of this earlier. Look at this. Okay, but the Trade Scanner Pro kept me in. Do I know it's going to do this? I have no clue. The script keeps me. Look at this. We're almost at the break even. Look at this. We're almost at the trailing stop is almost at the, now it's above my profit objective. How nice. They all don't work out like this, but how nice, right? So now I can ride a runner. How much am I up on this? All right, it looks a lot bigger than it is. It's $130 or whatever on one contract. Again, this is on paper. For those of you that might not know, we're moving into this resistance area up here, which again, we prepared for earlier. So now in a situation like this, we're going into a known resistance area, right? Because I had done analysis earlier. Remember, I told you how to prepare? We picked the right side because of the analysis. We got the confirmation, which is key. And I was able to capture this opportunity, which otherwise you probably would not be able to capture because the Trade Scanner Pro defined the whole thing, right? Now, my point is here, I can get out because I know we're at a resistance. I could make the conscious decision to get out, or I can just let the trailing stop make that choice for me, okay? Only you can decide that part. You have to decide, okay, I'll let it run or I'll get out, right? Look, but at this point, I don't even have a red candle. I don't even have a red candle. So why am I going to get out? At least give me a red candle. Man, look at this. This is going berserk. What is going on here? Let's go to the 1 minute. Man. All right. Good thing I'm long. So the trailing, look where, I mean, if I get a pin bar, I just, well, again, you have to decide. Right? Look, all right, so you know what we'll do just for this example? I'm going to let the trailing stop tap me out. Let's see how far it goes. Now, I had a chance to get out, let's say here. I'm going to just put this line right here, okay? Because I can get out right here. Realistically, I can get out right now at that price. Getting out up here is not going to be realistic because I would have had to have had an order up there in advance. So it looks nice after the fact, but let's be realistic here, right? So, but right here, I can get out, I can press a market order right now and get out right there. All right, so we'll just leave that as reference. I could potentially get out there. So let's see which one does better. The trailing stop. Oh, good thing I stayed in. Well, so Steen, correct. With this kind of long tail, but remember, this is a 15-second chart. So you're going to see a lot of drama on here that you have to take it very lightly. If this was like a 5-minute or an hourly, then yes, a pin bar like that, you should do something. But this is a 15-second. So, you know, it looks a lot more dramatic than it is, right? But now look, we're getting like a double top pin bar again. Okay, just going to keep it in mind. But this would have been a choice to get out. Look at my trailing stop. So I want to see which one does better. My choice to get out or the trailing stop. Let's see. Right now, so far, my choice to get out compared to the trailing stop was the better choice. Let's see if the trailing stop overtakes it. Now, look, it's even. The trailing stop is now at the same price. This market wants to do something stupid and just keep going because out of its random nature, the Trade Scanner Pro aligns you with that. Because I would have gotten out a long time ago. Okay, if I was using my judgment, right? And I mean, look, Steven said that the pin bar, that can shake you out. But I have a point of reference here, right? I have this trailing stop that keeps me in. Doesn't always work out like this, but when it does, this is what it looks like. Look, there must be some news going on or something. Clearly, there must be news. And the market just wants to keep going. So I keep staying in it. I'm not thinking. Okay, now look, the trailing stop is now better than my exit. The blue line is where I could have gotten out, right? So let's just say I got out there. I'm missing all this, right? The trailing stop kept me in. Way better. Now the trailing stop is like way better than my exit. Nice, right? Look at this. This all came from a 15-second entry. Do you want to know what my risk was on this trade? Relative to my reward. All right, let's see if I'm going to let it go to the trailing stop, and then we're going to measure the risk, right, relative to this reward. I'm still waiting, right? So again, this would be a reaction point. My initial reaction point was here. Okay, look how much money, look how much more I'm making because I'm letting the Trade Scanner Pro think for me. I'm not thinking. I'm up $529 on this contract. Not bad, right? And again, I'm just going to let it go to the trailing stop. It's probably going to tap it out now. Okay, no problem. There we go. Closed it. All right, goodbye. I'm out. Okay. So it looked beautiful up here, right? But again, I wanted to be realistic about it. This was my initial entry, my initial exit where I would have gotten out consciously. This second blue line is basically where the trailing stop got me out. Okay. So let's erase this one. And this trade, this was the entry right here. Wow. Does it calculate that whole thing? So look at this. 429 points on a 15-second signal. What was the risk on that? Now, all right, so let me do this. So I can show you, okay? I can show you because we can basically go to the replay mode here. I can show you. Let me advance this so we can see the signal. There's the signal, okay? This was the signal. You saw me take the signal on a 15-second chart. Let's see what the initial risk was. 23 points. I locked in 1 for 1.5 reward risk. Remember, you saw me do it. I locked in 1 at 35 points. Okay, that's proportional. I locked in the second one at 429 points. Okay, whatever that was. When I turn this off, right? So my initial risk, I'm just going to draw. Let me just draw the rectangle on here. My initial risk, 15 points. No, I'm sorry, 25 points. My initial risk, 25 points. 25 points to make 429 points? That's ridiculous reward risk. What is that? That's more than 10 to 1, isn't it? I don't even know what I need to calculate it for that. 10 to 1 would be 200 points, right? Or 250 points, right? So it was almost 20 to 1 on that trade. Am I right? So let me turn off this thing here. Okay. And again, you watched me do this in real time. So the entry, the entry was here, and I got out up here. It went way beyond this resistance line that we had anticipated, right? And the only reason why I was able to capture such a move was because the Trade Scanner Pro simplifies the decision-making process. So this was a great trade to see an example of on such a small time frame. Now, again, don't be misinformed or misled. They all don't work out like this, especially on a 15-second. But what the great example here is that the risk was tiny relative to the reward. That reward was enormous. The only way I could capture something like that is with a tool like this, because all of these turning points here would have gotten me out sooner, most likely, as I pointed out. And then this is the move that got me out based on the trailing stop. Do you see the value in that? And look, this thing's probably going to continue. There's probably more signals in there. This is the 15-second. I'm not getting one right now. But again, I'm not going to take another signal. You got the idea, though. So this, relative to this gigantic move, this little square over here, see that square on my chart? See this little square? That little square was my risk. That little square was my risk. And this square, here, let me draw it. That little square was my risk. And this square was my reward. If you don't see the value in this tool, I can't help you. Okay, but again, they all don't work out nicely like as nicely as like that one. But that's a great example in real time. I showed you in real time how you can take advantage of movements with first coming up with your forecast. I mean, look, we forecasted it correctly. I could have been calling for a short, right? But we aligned with the market along. And then it defined our risk. It gave us the confirmation. And it went way beyond the profit objective, way beyond. In a wild market, and this is not even a wild market. In a wild market, you can see that on a much bigger scale, on much bigger time frames. Okay, pretty cool though, right? All right, that was a great example. Any questions? Any questions? All right, I'm going to turn this off over here. Okay, nice for Bitcoin to cooperate. Now again, remember, guys, this all came from higher low, higher low, higher high analysis that we had done on the hourly previous to this move. And the Trade Scanner Pro helped us find an entry, and it kept us in for a broader portion of this move on the bigger picture. Cool, right? Look, if I had just held on, I could have gotten out up here. Whatever. Like I said, my plan was to get out at the trailing stop. You're never going to capture the entire move. Any questions? Anyone still here? People are like, yeah, whatever. I hope you see the value in that. All right. So again, if you want to sign up for a 14-day trial, 14-day free trial, there's a link in the description. You have a link on the screen here. I showed you before. At support from 24-hour. Oh, so we're for the daily chart. Oh, we're pushing right. That's the inside bar high that we talked about earlier. Okay, right. We blew the hourly, right? This is the inside bar high. Blew it. It took it out. So anyway, but we were prepared, right? See how we connected the bigger picture to the smaller picture, and we aligned, and the market probability played out. It doesn't always work this way. That's why we have stops and we define the risk. But man, when I win, I win more than what I lose. And in this case, I went way beyond the profit objective. When you get a winner like that, that's what puts you way ahead of the game. Okay, I made $400 and something or whatever on the one contract, and I made like what, $30 or something on the other one. So my risk was 25. Do you see how that works? All right. Anyway, I'm not going to keep harping on that. All right, guys. So again, check out the link. If you have any other questions, you know where to find me. Make sure you go to the Discord community. There's a lot of support in there between Steen and Alex. And by the way, if someone reaches out to you, right, whether it's me or Steen or Alex, and they're asking you for money, it's not us. There are scammers out there that like to take advantage of people. So please, if you get a message from us, initiating a message from us, right, we send you a message and the message is strange, but it's friendly and we're asking you for money, or we send you to weird websites, it's not us. Block the person, report the person, and make sure that you let everyone know so that other people don't get scammed. Okay, please, very important. So no moderator will contact you. I will not contact you. If you contact us, we will answer back, but we will not contact you first. Please keep that in mind. I don't like when people get scammed. They take advantage of my good reputation. They take advantage of Steen's good reputation. And Alex, please don't be taken advantage of. All right. Any other questions? So make sure you check that out. Make sure you like and subscribe to the YouTube channel, right? Because I still plan to expand my content eventually. It's coming, don't worry, and all that. All right. I hope to see you on a TradeScanner Pro trial. And again, every Monday, it's your opportunity to learn how this works. My goal is to teach you how to forecast the market properly so that then you can be better prepared to use a tool like this to your advantage, okay? And simplify your thought process. It's a major thing, especially for someone that's new. This really takes a lot off your learning curve, but it may be hard to appreciate in the beginning. So again, don't be shy. Come to the community, ask questions. We're all here to help. Okay. All right. So again, people, thank you for joining me on this holiday. Yeah, man, I talk too much, but you know what? The market kept me in. The market was just going nuts. I wasn't going to just turn this thing off in the middle of a nice trade example like that. So again, thank you for joining me. Keep in mind, like what I said before, this week is going to probably be a little more on the quiet side as we come out of the holiday. So still be selective, play your levels, have your idea in advance. Okay. Go to my video from July 3rd on my YouTube channel. And in there, you can learn the 5 steps that you have to take to use the TradeScanner Pro properly. Okay. The things that I had done here basically can be condensed into 5 steps. So you can go watch that video and that will also give you a much better idea. All right. So I hope to see you on the free trial. If you have any other questions, let me know. Thank you for watching. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And again, thank you very much for watching.